What's going on, traders? Mike from CapitalHillFX. In this video, we're going to go over a very important concept: systematizing your trading approach. You see a lot of new and aspiring traders step into the space and they don't have a step-by-step process to find profitability in the markets. Well, that all ends with this video. Hopefully by the end of this video, I give you a good idea or an objective guideline so that you could jumpstart your trading journey. The number one thing that you're going to want to do is build that foundational education. Head to free educational platforms like Baby Pips, Forex.com. I have my own free course in my Discord server. The link is in this description. 16 different lessons, written word, 1 to 2 minute animated videos on each single lesson. I'm telling you, it's everything you need to know before you're actually hitting the charts in the market's live time. So make sure that you build that foundational education. You don't want to go to technical analysis if you don't know what a currency pair is, you don't know the main players in the market, or you don't know what a pip is. So make sure you educate yourself before you're heading into the charts. After you educate yourself for 5, 10, 15 hours, don't spend too much time, because I always like to tell everybody, you don't need to educate yourself too much, spending 20, 30, 40 hours impeding on your chart time by educating yourself on podcasts, YouTube videos, and all these different books and stuff like that. Make sure to focus your time on what matters, developing a system that works for you and backtesting that system. So after you educate yourself, make sure you develop a trading system that works with your own tendencies and habits. If you're trying to implement a trading system from another profitable trader or a hype trader that you've seen on Instagram, it may not work with your tendencies and habits and how long you could actually allocate on the charts on a day-to-day basis. It's very important to identify what type of trader that you're going to be: a scalper, a day trader, a swing trader, or a position trader. Which one makes sense to you? And actually soul search a little bit and see the characteristics that and strengths and weaknesses that you have as a person and try to implement it into your trading journey. So develop a trading system around you and then make sure you backtest that trading system. And we're going to go in depth today in this video of how you could backtest that trading system, systematize it, and then make sure to leverage it in the live market. So we're going to pick a currency pair and then we're just going to get to backtesting. So before we actually get into backtesting, this is a very good opportunity to show you the system that we're going to backtest today proves ridiculous amount of profits. I'm going to show you that exactly right here. We could see over the past 4 months, these are all trade orders that I've called out with my premium membership. And I've been tracking all of the trades live time with all of my premium members. And we could see we're up 10.78%. We just capped off this April at 10.78%. March was 10.36%. February was 14.3%. And January was 10.85%. Over 46% profit over the last 4 months using this exact system that we're about to backtest. I'm going to use a random number generator just to get a good idea of what currency pair we're going to be backtesting. I'll do 1 through 27. That's all the currency pairs. 22. So we're going to go down 22. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 21, 22, NZD Canadian dollar. So the first thing that we'll do is remove all the drawings. And then what I usually like to do to avoid confirmation bias is scroll ridiculously close into the charts, sort of like this, scale really, really close. And then we'll go down to we'll go up to the larger time frames and we'll just scroll back in previous data. And we'll scroll back maybe to the beginning of the year. And you see how we don't see the candles. We don't have confirmation bias because we're not seeing market structure. We're not seeing where price is headed previously. We're just scrolling back in previous data. That's what we want to do when we're back testing our trading system, so that we don't have confirmation bias of our trading decisions whenever we're placing these trades in previous data. So I'm going to stop right here. I'm only going to place like 5 or 6 trades. We'll do back testing data here. And then we'll scroll back and look at the market. So the first thing that we want to do when we're backtesting our trading system is outlining our trading system, right? So we're going to go to the text box. What are we going to be trading? I trade bounces off of daily horizontal levels. So I'm going to be putting bounces off of daily levels. What's going to be our entry criteria? Our entry criteria is going to be bearish or bullish price action around key levels. Those key levels, around those key daily levels, right? Our exit criteria is going to be fill or kill. And this basically means it's going to hit stop loss or it's going to hit take profit. We're not managing these positions at all. So even if you're using this exact system in the live markets, there's going to be no emotional trading decisions while you're actually in the trade, because you're not going to do anything. You're just going to sit on your hands and you're going to watch the trade either hit take profit or hit stop loss. And then our risk to reward ratio. Our risk to reward ratio, we're just going to do a 1 to 2 just to make things super, super simple. And even for the entry criteria, just to simplify the whole entire thing, we have an indicator. all candlestick patterns, and it just shows the price action, identifies the price action around these significant horizontal levels, just to make it super, super simple. So without further ado, let's actually jump into this trading system. I'm going to cancel all this. Make sure you outline your trading system's entry and exit criteria before you're backtesting your trading system. I know this system like the back of my hand, so I don't need it right next to me, but maybe it's smart for you to write it down, have it right next to you in front of your face while you're actually backtesting your trading system. Because a lot of people, they may be backtesting a system, but they can't execute on that system. They need to see the entry criteria. There's no shame at all. Just make sure that you're doing so. So we're going to start off on the daily timeframes, making sure we're utilizing that top-down analysis approach. And then we're going to work our way to the smaller time frame. Starting off on the daily time frame, I'm just outlining significant daily levels that price could potentially interact with. I like this resistance level that we're currently interacting with. We could see that we've bounced here previously in the past as resistance. I wouldn't be surprised if we bounced here yet again. And then I'll spot out one or two more. Anyone that looks significant to me. This one looks pretty significant. And that's about it. Maybe we could mark up this one just in case we end up pushing a little bit higher. Cool. So what am I going to do? I'm going to wait for price to come into this significant zone, which we already have. I'm going to wait for bearish price action. So we're going to go down to the hourly time frame. The hourly time frame is where we're going to be executing on. And we're going to wait for bearish price action. Now, like I said, we're going to use an indicator or an identifier. I don't even like to call it an indicator. I like to call it an identifier because it's literally just identifying the price action on the charts. It doesn't have an algorithm or an equation on the back end. It's literally just identifying the candles on the chart. That's all it's doing. We can see that we've already printed multiple bearish candles. I wasn't present for that, so I'm just going to wait to see if we could push back up into the zone and form another bearish candle or bearish indicator. And we're going to keep it super, super simple. And remember, each one of these candles are hourly candle closures. So it looks like we just formed a bearish engulfing around this significant resistance level. So I'm just going to place a sell with my stop loss above this previous high right here, maybe at a 90 pip stop loss. And then we'll do a 1-to-2 risk to reward ratio, just like I promised. And remember, like I said, each candle is 1 hour candle closure. So you'd be looking at the top of every hour with this trading system, hourly candle closures. And it's very important to note the candle closures that you're trading off of, because that's what you'd be trading off of in live time. Let's wait to see what ends up happening. I'll play this out. End up having a small push towards the downside, coming back to the zone to retest. Let's see if we end up actually pushing back towards the downside. Close to take profit. Let's see if we can make a small push. There it is. So this would hit take profit for a 1-to-2 risk to reward ratio. So we're going to do the text box and we're going to do plus 2R. This basically means this is 2 units of reward. And you're asking yourself, Mike, what the hell is a unit of reward? A unit of reward is basically a multiplier of whatever you're risking on that trade. So let's say we risk 2% on this trade. We would make 4% back. Let's say we risked 1% on this trade. We would make 2% back, right? So a unit of reward is basically a multiplier of whatever you're risking for that trade. Let's go back to the daily time frame and see if we could spot another setup. Daily time frame. I'm going to be waiting to see if we come down to the significant support resistance level, and then I'm going to treat it as support if we end up bouncing with some bullish price action. We'll go to the 4-hour time frame just because we're in substructure right now, meaning I literally don't care what happens around here. I'm just waiting for price to come to this support or resistance level. Looks like we're making our way down to that support zone. And it's very important to note that with this trading system, you would just set alerts around these significant zones and just wait for price to come to these zones. You don't have to look at the charts the whole entire time. You're just looking at the charts whenever price comes to these significant zones. That's what's so nice about this system. And I'm sure you could find swing trading systems very similar, where you're literally setting alerts around the significant price points. That's all you're doing. You don't have to monitor the charts 24/7. That's the common misconception with a lot of people thinking that if you have to trade Forex, you have to look at the charts all day, every day. It's just not true. Looks like we are making our way into this significant horizontal level-ish. I'm going to go down to the hourly time frame, considering we're starting to impede into this zone. I'm going to wait to see if we could push a little bit deeper into the zone. We just formed a bullish engulfing. I'm going to wait to see if we could actually push a little bit deeper into the zone. Okay, Here we go. Here we go. We're getting tons of bullish price action around this significant horizontal level. Let's just say we placed after this last bullish engulfing, which is a bad entry, but just conservatively wise, let's say we placed after this last bullish engulfing. Let's say the stop loss, we'll even put it below these lows, which is about 60 pips. Yeah, 60 pips. And then we'll put the take profit as promised, 1 to 2 risk to reward ratio. That's it. We may get stopped out. Who cares? Made a little push towards the upside. Let's see if we continue the bullish move. Coming back to test the zone yet again. See if we could finish. Stopped out. So this would have been a stop out for -1R, which is completely okay. Go into the text box. -1R. No big deal. No sweat. Looks like it just tests the top half of the zone. Let's see if we get a deeper push into the zone because we still could trade a bounce off this level. Again, I'm just waiting for more bullish price action to form around the significant horizontal level because at the end of the day, if we go back to the 12-hour time frame, we could see we are around a significant horizontal level that has been respected in the past. And I'm just waiting on the hour candle to spot another bullish candle or bullish price action. Oh, there we go. We just had it. See, we just spotted a bullish engulfing. I'm going to be placing another buy. Stop loss, we'll do it a little bit less because we have a better entry. We'll say 40 pips. Take profit as promised at a 1 to 2. Keep it right there. Wait to see what ends up playing out. Absolutely smacking the take profit. These types of trades are the best types of trades, right? You enter them and then like 3 hours later you hit take profit. Those are the best. So what we're going to do, +2R, we're going to keep it pushing. So out of the 3 trades that we placed, we had 1 loser and 2 winners. We're going to keep it pushing. Let's see if price could come back into this support zone and look for another bounce. No, we just absolutely take off. Let's go back to the 12-hour time frame. Let's see if we could spot any more horizontal levels. This zone still seems pretty good. These 2 zones seem pretty significant. I'll do 1 more trade just because I think we're coming to live data. I just wanted to give you a general idea of how I'm trading the markets and how you could actually backtest your trading system. This is a very practical way to be able to test your trading system. Okay, so we've pushed into this significant daily resistance, or excuse me, support zone. I'm going to go down to the hourly time frame and see if we spot any bullish price action. There was not bullish price action when we pushed into this zone. We could see that we had some bullish engulfings at the top half of the zone, but the last time that we reversed at this zone, we pushed really deep into the zone. The mistake was that we tested the top, or we traded off the top half of the zone and not really deep into the zone. So this is sort of some data that you could sort of capture right off of this data. We could see that we traded a bounce off the top half of the zone and it got stopped out. Maybe if we want to grab some insights from this loss, which you should be if you're back testing your data, you say to yourself, okay, well, maybe I want to wait for price to fully test the zone, push into the zone, show a lot of confirming price action that price is going to bounce towards the upside, and then we'll look for upside movement. We didn't wait for that with this trade. We sort of just captured a bullish engulfing and then captured the bounce off the upside. Even though it was just testing the top half of the zone, most likely you should be waiting for a full test of the zone where price has reacted in the past and then look for that upside move. With here, we just completely violated the zone. Let's see if more bullish price action forms. It would be very interesting if we had a lot. Okay. So we had that bullish impulsive move. Let's see if we've formed some more bullish candles. Bullish price action, of course. Okay, I'm going to place another buy. We're forming tons of bullish price action around the significant daily support zone. Placing a buy with my stop loss below these lows, something like this, 40 pip stop. And then you guys already know my risk to reward ratio, 1 to 2 risk to reward. We're going to see if this plays out. This will be my last trade, and we'll wrap it up and sort of go over the results. Oh my goodness, so freaking close. No big deal. So we literally just missed the take profit by what? 10 pips. Those are the worst, man. So we would have missed our stop loss, or excuse me, our take profit by 10 pips. We'll just say it's a loser. So out of these 4 trades, we lost 2 and we won 2, right? Okay, so now let's go over all the data. So we placed 4 trades in backtesting data. And of course, if you want an effective data set, you want to place at least 20 trades per market. I'm just doing 4 in this example, just because I don't want to be on the video for freaking 40, 50 minutes. But we can see, placed 4 trades, 2 of them won, 2 of them stopped out. So what are we going to do? We're going to note it all. We were 2 for 4. That means we were 50% accurate on NZD Canadian dollar. And we yielded plus 2R. And the reason I say plus 2R is because we can notice that this yielded us 2R. So if we risked 1%, we would yield 2%. This one, we lost 1%. This one, we won 2%. And this one, we lost another percent. So 2 plus 2 equals 4. And then minus 2 equals 2, right? So we would have yielded 2R. If we risked 1% on all 4 of these trades, we would have ended with plus 2% on all of these 4 trades. Now, if we risked 2%, then we would end with 4%, right? So that's why the units of reward is just a multiplier of whatever you are risking. And then, of course, we've only placed 4 trades, so there's no real winning or losing streaks, but it's very important to note your winning streaks and your losing streaks. And then lastly, what I like to do, and you don't have to do this, but of course it could give you that edge, is rating it on a 1 to 5 star scale, right? So if the trades were very obedient with the levels, then it's near a 4 or 5 star. But if they're sort of playing around your entry, just wiping you out of stop loss and then going towards the other direction, or there's a lot of indecision, that's very choppy, price isn't moving right around the levels, then it's maybe going to be near the 1 star scale, right? So it's very important to not only gain the statistical data like your winning percentage, your winning streaks and your losing streaks, but subjectively mark up how effective that market is for your trading system on a 1 to 5, 1 to 10, whatever makes sense to you scale. So this is the data, right? This is what you want to capture before you're actually trading it in demo or live. So once you have your backtested data, it's very important to carry it out into a demo account. I've seen countless amount of people backtest a trading system. It's a phenomenal system. It yields so much profit, and then they try to trade it in their live account and they blow their account. It's because they can't execute on that system that they've backtested. It's very important that you execute that exact trading system that you're backtesting into a demo account. Make sure that you portray profits and you display profits, and then you could actually go into a live account. I teach this exact systematized approach in my premium membership. If you want to get a better idea of how to trade the markets or how to align your trading system with your own habits and tendencies, why don't you check out my premium membership? The first week's completely free and it's $59 a month. And I'm going to be adding so many more resources, and the price is going to be going up very soon. So make sure to lock in your price at $59 a month. This is Mike from CapitalHillFX. I hope you gained some value from this video, and I'll see you guys on the next one. Cheers.